Good afternoon. The Fraser Valley condo market is pretty much in free fall at the moment. So I've got here pulled up a chart of basically what I've determined to be the biggest winners and losers of the Fraser Valley condo market. And I use the word winner very loosely. Basically, a winner is just somebody who's fallen a lot less than other areas, right? So on here, I've got South Surrey, Whalley, which is Surrey Central, Cloverdale, and Willoughby Heights. So this year in 2025, year over year, you've got Willoughby Heights only down 3.9%. You've got Cloverdale only down 3%. And then you look at Whalley down 8.9% and South Surrey also down 8%, which is actually very surprising to me that South Surrey is getting hit as hard as it is, because it is a more end user area. And now you can get basically brand new, top of the line, one bedroom product under 500,000. I just saw a 1,000 square foot, 2-bed, 2-bath, 2017 build sell for $625, and that's assessed at $730,000. Would have been a $750,000 unit all day long, not too long ago. So you can probably get like a 900 plus square foot 2-bed in South Surrey that's almost brand new for, I'm gonna say like low sixes, 610, 615, something like that. So that was surprising to me. This is your biggest winners and losers for the Fraser Valley at the moment. Now keep in mind, this is the HPI. This is the home price index, and the home price index tends to understate what's actually happening. So, it says 8.9% in Surrey Central, but I've seen probably more like 10 to 12% for a lot of the condos that are out there. And if we look at 2024, you had South Surrey up 5.5% year over year last year. You had Surrey Central only down 1.5%, Cloverdale only down 1.9%, and then Willoughby Heights actually went up year over year in 2024. So the condo market pretty much right across the board is getting smashed right now. But again, you have Willoughby Heights and Cloverdale holding up really, really, really well, because those are your, cream of the crop end user areas. Now, as a realtor, something that is can be frustrating is trying to explain to a seller what their home is actually worth, because it's very they're emotionally tied to it. They've made memories there. It has sentimental value. And one objection that you have to overcome a lot of the time as a realtor is, well, the assessed value is this, right? So just to harp on this assessed value again, and especially for people that are thinking about selling, you're going to want to understand what's happening. The assessed value is just what the city thinks your home is worth as of July last year, 2024. So if the prices were going up, your property is likely going to be worth more than the assessed value. If the prices have been going down since that time, then your home is going to be worth less than the assessed value, depending on how right the city got it when they actually made that determination, when they actually assessed your home, right? Because a lot of the time they're pretty wrong on that as well. But it's just used as a benchmark to see what the prices are doing. So this is the sold price to assessed value ratio for properties in the Fraser Valley, right? So you can see basically as of April, pretty much everything was 100% of its July 2024 BC assessment. And since then, things have been slowly tapering off. You saw them come down a bit in May, right? You have detached at 98.4% of the assessed value. That's where things are selling. So they're selling 1.6% below the assessed value. Apartments at 98 and townhomes at 98.7. As we go into June, you see it drop a little bit more. Now detached is 97.4. Apartments are 96. Townhomes are 97.8. You go into July, you have detached at 96.8, apartments at 96, townhomes at 96.5. You go into August, which is already pacing for apartments 89% of the assessed value. And again, the HPI is a lagging indicator. So it's kind of telling you what happened 1 to 2 months ago. I just told you that what I'm seeing in like the Whalley area, for example, is condos are actually selling more like 10 to 12% below the assessed value. And what this chart is telling us is that it's pacing for 11% below the assessed value for apartments. You have townhomes down 95%. So even townhomes came down, 1.5% below that assessed value, just month over month. And then detached, for whatever reason, is pacing for up. So, they have very little data. We're 4 days into August. So I'm assuming this is going to change. But what I am seeing right now in the apartment market is that, especially in certain areas, is that the prices have come down, basically 10% since the start of the year in a lot of areas. So if you are a seller right now, selling pretty much anything in the Fraser Valley, and you're looking at your assessed value as a good gauge of what you expect to get when you sell that home, it is very likely that the amount you're going to receive is going to be, less than that value. Certain properties, maybe not. Like as you get into like farmland and stuff like that, the assessed values tend to be extremely wrong. Like you can sell a couple hundreds of thousands above that assessed value, no problem. But if you just have like your run-of-the-mill condo townhome type of deal, more than likely, pretty much almost 10 out of 10 times, you're going to be selling below that assessed value in today's market. Now let's get into the actual stats here for the Fraser Valley. So, even on the HPI, prices ticked down again on aggregate about $6,000. This is, condos, detached, townhomes, everything combined in every area of the Fraser Valley. We are down about $7,000. Detached is down, $7,000. Apartments are down $6,000. Townhomes are down $10,000. So townhomes are finally coming down in price. I can't even talk about it. I have a wicked deal on a townhome right now pending a price that I didn't think would even be possible. Basically, the seller got caught between deals. So, praying that one goes through. But there are some crazy deals happening out there right now. And a lot of sellers who need to move this product fast. And that's why you're starting to see the prices come down faster, because you have landlords that just, can't take it anymore and need to get rid of that product. People that are they can't afford to make the mortgage payments anymore, so they just need to sell and move away to rent or whatever the case may be. I just did another deal on a townhome where the seller had lost every single penny of equity that they put into that townhome. Like after they sold it, their 20% down payment was completely gone. No money left. Now to show you guys what's happening in the Surrey Central condo market, it's now on the HPI at 439,000, and that is now officially below the December 2022 bottom of 455,000. Your sales to actives is 9%, which is probably about 12 months of inventory still in Wally's condo market. And then you have inventory sitting at 758 right now. Now, just as a fun exercise, I think you can buy a condo in Surrey Central right now that's pretty much brand new, like 2021 build, 500 plus square feet with parking, probably around 420,000. I just got one offered to me for 405,000, but I need a new flooring, paint, and the tenants had kicked a hole in the door. So my people are first-time home buyers. They don't want to do renovations and stuff, but it was a really good deal at 405,000. So you can get 420K now for like one of these condos, and your payment on that is going to be roughly $1,644. And you can probably rent it for like $1,700, $1,750. So the rent will cover the mortgage payment now, right? The thing is, I guess what I'm getting at here is when does it make sense for investors to come back? Because investors are gone, right? And in the last 18 years, you would be an investor based on the future prospects of price appreciation, right? So you weren't buying because of the cash flow. You weren't buying because the rent would carry the expenses. You were buying because you thought the price would go up. And currently right now, nobody thinks the price is going to go up, at least not in the next 24 months. And that's why investors are completely vanished, because they don't cash flow and there's no future prospects of price appreciation, right? So when do investors come back? Well, you're either going to need to see somehow that the price is going to go up, which is going to be very difficult in the current environment with no population growth, a pipeline of rental construction, and still a pretty full pipeline of just new construction that has to complete in the next 18 months. So that being the case, at what price does the property's rent carry the expenses, right? And I think, in my opinion, you're probably going to need to see the rent cover the mortgage and the strata fees. And then I think investors would be willing to take a hit on the property taxes and the insurance, which probably only going to cost maybe like $250, $300 a month, right? So what price is that? 360,000, you're still not there. 340,000. It's about 340,000, right? So it's another $80,000 drop to see like investors really want to come back into this market. There is investors right now, but they're buying, like I said, for different reasons. They're buying for like their kid, or they're buying, just to have something in retirement, like let the tenant pay off the mortgage, and in 20 years, I'll have something that, pays me an income every single month. But the people that, the true investors that are like, do I buy this, or do I buy something else somewhere else, or do I buy equities? I think for those people to come back, which is probably the majority of investors, you're going to want to see these condos at like 340,000. Now, I'm not saying that is where they're going to go, because you still have a whole nother market, which is the end user market, right? The prices don't have to go that low. I'm just saying, at what price do the investors come back, right? Like maybe the price just kind of bleeds really, really slow into like mid 2027. And then by the middle of 2027, there's a picture that can be painted for price appreciation by like mid 28 or 29. And then you would see investors come back into the market and be willing to carry these properties cash flow negative. But if you wanted the property to carry the expenses, or, the large majority of the expenses, 340,000, if you wanted it to be cash flow positive, you're probably looking at 300,000, right? And again, I'm not saying that's going to happen. Basically just showing you what the numbers look like in the current market. The properties don't have to be cash flow positive for people to invest. There's lots of markets where people buy property that aren't cash flow positive because it's a supply constrained market and the prospects of price appreciation are very high. And that doesn't exist right now. But that doesn't mean that it isn't going to exist in like 18 months, right? But that being said, if you enjoyed this video, please like and subscribe. And if you want to chat with me about buying in any of these areas or selling, you can use the link down below to book a time to chat with me. Otherwise, I'm that agent Kelly. I'm making moves to move you. Peace.